I see us printing money, but that's exactly why you want to have the Bitcoin bond on your balance sheet. Now, what's really interesting is we see Iran is shooting missiles off into Israel, and the things are getting hot, things are heating up. But what's interesting is the marketplace is selling off its Bitcoin because see the marketplace doesn't really understand Bitcoin as engineered money. It sees it as a speculative risk on technology, maybe not even as few see it as an asset. Even fewer see it as a commodity, and barely anybody understands it as engineered money. But the more money we print, this creates a positive feedback loop. This is the magic about the Bitcoin bond, because once you issue that $1 billion bond, something happens. It creates demand for Bitcoin, right? Because you raised $1 billion, 800 million is going to the U.S. Treasury, 200 million is going into Bitcoin. That means you're going to create positive price pressure from the increased demand on buying Bitcoin. When Bitcoin's price goes up from all of that buying demand, the yields increase on the note because the yield of the note is based specifically on the performance of Bitcoin. And then as the performance of Bitcoin increases from the increased demand, the yield goes up. Higher yields creates more demand, right? When interest rates go up, there's more demand for that debt. Well, this is a principal protected. This is a low risk, high reward debt, and the yield's going up. It's going to generate a lot of demand. Well, that means there's going to be more issuances. And if there's more issuances, there's more buying of Bitcoin, which creates demand, which pushes the price up, which then pushes the yields up. So you get this positive feedback loop where you issue the bond, you create demand for Bitcoin, the price of Bitcoin goes up, the yield of the bond goes up, you issue more bonds, and it just keeps going and going and going. And the more money we print, because Bitcoin is engineered to protect us, it's a savings technology designed to protect us from inflation. The more money we print, the better the bond performs. So all of a sudden, our biggest enemy, inflation, our biggest fear, having to increase deficit spending, actually increases the overall value of our balance sheet because we're holding Bitcoin bonds on it. So you could see a country that is almost $300 trillion in debt all of a sudden have net positive equity because we made the right strategic choices in integrating Bitcoin into our system and into our economic policies.
All right. So then that's the way out then, right? I mean, it seems like it's a no-brainer. Just keep the Bitcoin that we've seized on the balance sheet, buy some more, maybe even print a little bit because we're going to print some more and use that for government spending to buy a Bitcoin. It seems easy. Why the resistance? Why are they just starting to come around? Do you think it's a lack of education? Like where is the disconnect right now with the government? And on the flip side of things, is the government or maybe just people in general just delusional? Is that why we still have the trust in the government? And I mean, you look at the US debt clock now, CJ, I mean, I'm getting dizzy just watching that number continue to tick up. So, I mean, if I could just go to a website and look at that, why isn't everybody else seeing this? And why is it only Bitcoiners that are seemingly awake to this?
Yeah. And that is the million, billion, trillion dollar question, because that answers the question. You know, in my study of fiat currencies, they try to tell you in the textbooks that 50% inflation per month is hyperinflation. But when you go back to all these different times and all these different economies and cultures, there is no mathematical point where inflation turned into hyperinflation. It's the one thing that is true across all time and space and economies and cultures is that when trust was lost, they moved from inflation to hyperinflation. And that's where we are right now. This is just a sign that people are still trusting the system. We haven't passed that threshold. We haven't lost that trust. But the continued abuse of the printer is what's going to be the final straw, because people will see their quality of life and standard of living go down. So yeah, I think it's an educational component. The other thing is that Bitcoin is only in year 15. You know, for those who study financial history, like yourself and myself and others in this little niche market that we have, people don't realize how long it took to go from giant, big old yapstones and seashells and, you know, from a barter system and to evolve naturally into where we are today in modern finance. That process took thousands of years. We are in year 15 and Bitcoin is already a store of value. We are in year 15 and Bitcoin is already being integrated into Wall Street with institutions stacking. This is unbelievable. The rate and pace of adoption of Bitcoin is even outpacing that of the internet. So I think that it's a trust component, it's an educational component, and it's just a component of like new technology. right? There's this famous quote. I forget exactly how it goes, but it's like new technology is just like magic. Like the regular folk of the day will see new technology and they'll think that it's magic because they're like, what? So you sit down with some of these people and especially at the higher levels, and they're not thinking about these things. They don't really care about these things. They just want to make sure that their purchasing power is protected into the future and that their 10, 15, 20, 50-year plan is on track. And inflation has done that for them because they don't understand the difference between the inflationary nominal gain and the real gain until they try to build that factory, until they're in year 10 and they say, wait a second, I was supposed to build like 3 factories. Now you're telling me I can only build 1? What the hell happened? Who messed up? And then they start to learn these things. So it takes time for people to learn it through education. It takes abuse to people to learn it through trust, but it takes dedication and understanding to just understand the new technology and the innovation that's come into the space. And that's why it's so important, like I said, to support Satoshi Acton Fund, Citizens for Sound Money, Watchman Action Group. Get out there and get behind these guys because they're the ones who are educating the politicians on why these things are important. So the next step is, make sure that you're being active in your local community politically as well, so that these people understand what's important, because it may not happen on the federal level. People need to understand that the federal government isn't the solution to all of our problems. In fact, a lot of our problems are created by them. So you need to turn to the more local ideology. And when you do that, when you can teach these local governments about a product like this, I think that's the future for Bitcoin for mainstream adoption. Because what you're going to have is, look at some of the disasters that are happening today. I mean, it's really sad. I'm on the west coast of Florida. We just got crushed with Hurricane Helene. Thank God we made it out safe, but there's billions of dollars of damage. Moody's just came out and said there's upwards of $50 billion of damage here in Florida alone. Now let's look at North Carolina. Those storms went up there. The dam broke. There's all that flooding, loss of life. Hundreds of billions of dollars between Florida and the Carolinas and what happened of damage. Well, at the same time, the federal government is sending billions of dollars overseas. They're sending money to everybody except us. It's unbelievable. And it seems like they're counting everybody's vote except us too. It's just crazy. They're like I said, they're doing everything they can to abuse this trust. So I hope that helps people start to wake up. But on the local level, we need to understand that we need to support our governments and support our politicians on the local level, just like they did after the Articles of Confederation, where the states had the most power and there was not a federal entity in government. So, I'm with Thomas Jefferson. I'm with those guys. I think, the states need to have that power, and we need a smaller, super decentralized federal government, not an overbearing federal government that can spend $2, $3, $4 trillion more than it collects in taxes every year for whatever reason it desires. That's what creates kleptocracy, a fight for the purse. So you look at all these things and you say, where's the money going to those people in Florida? Where is the money going to those people in North Carolina? Why are we not helping our own people? And we need to turn to the local level and educate them on the power of a product like Bitcoin bonds. Because what happens is the state or a municipality can start to have an insurance program for itself, right? Because if something happens like this, 2 things happen. Number one, the insurance companies get crushed, and we'll dive into that model because I think Bitcoin bonds is going to optimize that business model. But then the states get crushed too, because look, DeSantis sent up a bunch of our air assets up to North Carolina. Thank God somebody took leadership. Biden's on the beach. Kamala's trying to steal the election, and the governor of Florida had to step up and send assets to help these people. It's very sad, but it's kind of a preview of how it should be. The governors around these states should be stepping up all over the country to help come and support our fellow Americans who live in these distressed areas, to support them. But how are we doing that? How are we doing that when we don't have the monies to do it? Because we send all the federal tax. Florida has no income tax. We have sales tax and other taxes, and we do well through all the tourism and our robust economy, but we have no income tax. So what do we need to do? I think a solution to this is that you create an insurance fund, make it a separate entity like the Social Security Fund that the government can tap into when you have natural disasters like this, and you pack that baby with Bitcoin bonds. Because over time, if you need that money, you got principal protection. You can't lose, right? Like if a city or a state or a municipality or even the country adds Bitcoin to their balance sheet, what happens if they need to sell that Bitcoin during a bear market? You might have to take a loss on that. You don't want to have to take a loss on that. But if you have access or exposure to Bitcoin through a principal protected note Bitcoin bond, it's at par value. It matures at par. So in secondary market, you're going to get a price based on the performance of Bitcoin, because that's what produces the yield. So you can tap into that liquidity anytime you need it. Remember, in March of 2022, the banks ran into this very problem. They took all of the customer deposits and they bought US Treasury notes and bonds. They were forced out the yield curve because the bill was paying 0 to 0.25. That was the target range. You can't do anything but 0 to 0.25. So they were forced out to buy the notes and the bond to get the yield to profit for being the custodians of the people's deposits. Well, then when the Fed started raising the interest rates, all the depositors said, hey, I'm not going to keep my money at the bank where I'm getting 0.25% or even less. I'm going to move it over to the money market fund where I can get 3, 4, even 5%. And when the customer came to the bank and said, hey, I want to withdraw my money and move it over to the money market fund, the bank said, oh, shit. Well, hey, if a couple people want to do this, it's not a big deal. But if everybody wants to do this, it's a very big deal, because the assets that we bought that are backing the customer's deposit liabilities, the assets don't equal liabilities because the Federal Reserve just raised the interest rates. So the mark-to-market price is lower than the amount of liabilities that we need to send over to the market. I can't just send my customer's deposit liability to the money market fund. I need to send the corresponding asset that backs that customer deposit liability. So the Federal Reserve said, well, no problem. We'll create the bank term funding program, right? They could post it at par and borrow against that collateral at par, buy the treasury bills, send the bills over with the liability, and all is well. Well, Brendan, have you ever heard of the insurance term funding program?
I have not. That's time.
Yeah, because it doesn't exist because they don't care. So the insurance companies, when they have a natural disaster taking place, guess what? They took everybody's premium and they bought cash equivalents, US Treasury debt. And because the interest rate was 0 to 0.25, they were forced out the yield curve. They were forced to take the risk of these longer maturation timeframes in order to get a yield on their treasury. And the idea is, look, we collect the premiums, we put it into the treasury. The amount of claims against the treasury is going to be less than we collect in premiums, and what's left over, we make profit. Well, we have a problem because the collateral that they bought, the cash equivalent that they bought with all the premiums, same thing that happened to banks happened to them. Interest rates went up. The mark-to-market value of the assets backing the liabilities, backing the claims that are being made against the treasury from these natural disasters, they can't go to the Fed and post it at par and borrow against it at par. They have to sell it at a loss. They have to sell it at a loss. And that's why insurance prices have been going through the roof. Car insurance, home insurance, life insurance, health insurance, doesn't matter what type of insurance. If it's insurance, the price is up at least 20%, sometimes upwards of 40% just over the last few years. Well, why? And this is at a time when we're like trying to figure stuff out, trying to be innovative, trying to integrate, trying to maintain our leadership position in the world. And we have the insurance industry, which is 11%, roughly 11% of GDP, running into a big problem that the banks run into, but there's no insurance term funding program. Well, we got a solution. Bitcoin fixes this, because when you have a Bitcoin bond as an insurance company, you can get into the secondary market and get your liquidity at any time, because again, it'll be based on the performance of Bitcoin, because that's the yield on the note. So you'll be able to tap into that liquidity. But most importantly, you're not growing at a negative rate, because when the insurance company has to pay a claim, they might price a premium. But 1 year later, if you go by Gulflation, the cost to fix that claim is 10% higher. So that person might have paid a $5,000 insurance premium to insure their house on the beach. The hurricane comes. Now they need $100,000 worth of work done. Well, you're not, as an insurance company, you're just not net negative 95,000. You don't have to pay out the 95,000. You have to sell your treasury collateral. You might have to sell $120,000 of par value treasury, and you're only going to get the 95,000 because the rates went up. So you're locking in a loss in order to pay out that claim. So it's a double whammy. You get the claim coming in and you're locking in the loss from the underlying collateral. We can optimize the insurance business model, and we can create insurance programs for states and municipalities who can't depend on the federal government to send them money, which make sense, right? Send it everywhere else, print it and send it everywhere else, but not to us. We can create these programs in order to protect and empower we the people. And that's Bitcoin. Bitcoin doesn't care who anybody is, but it loves you more than the government. And isn't that an amazing thing?